Please welcome the Managing Director of Industrials at Cowen, Helane Becker, and the Director of Americas, Airlines, and Latin Transports at Citi Research, Stephen Trent, in conversation with Skift Senior Research Analyst, Seth Borko.
Hello, everyone. Welcome back. Thank you for joining us. We're very excited to kick off this afternoon session with some incredible analyst firepower today. I'm joined by Helane Becker of Cowen. She's been covering airlines for 35 years on Wall Street, consistently ranked by Institutional Investor number 1, 2, or 3 analysts in the space, which is a very big deal. We're also joined by Stephen Trent, covering America's Airlines and Latin Transports at Citi. He's been with that firm since 1999, so we have almost half a century of experience here on this call today, and he was ranked a top number 1 stock picker in 2020 by Starmine. So really great firepower here today. And we're going to talk about what else? Future of airlines. I want to jump in. Thank you both for joining me, Steve, Helane. Let's just right off the bat, we're going to start with the vaccine. It's like the biggest news of the sector, huge deal. Everyone is focused on it. But the saying goes that you buy the rumor and you sell the news. And we've seen a huge rally in stocks. Helane, we're going to start with you. Are you still buying airline stocks here, or do we hold off? How are you thinking about how the vaccine impacts the sector?
It's the vaccine has good news, the stocks go up. Vaccine has bad news, or there is bad news, the stocks go down. It's kind of an interesting market, though, because what you just said is true, right? Normally you would buy the rumor, sell the news, and that's not happening. What we're seeing is the news is causing people to buy. And we definitely see it on days when we get a lot of news. So today, for an example, we have a day where United and Alaska Air both said pretty much the same thing that Southwest and Allegiant said last week, which is that demand, since the increase in cases over the last couple of weeks, demand has started to fall off again. And we always knew it would be choppy. But that said, we think that people want to travel, and I know we're going to talk about this, and I know Steve will have something to add, but people want to travel and they're looking for ways to get out. And I think testing, like the video you just showed, suggests testing will help. But, we think that this is a blip in the whole history of aviation, and I know it's a pretty devastating blip. But we do think things will recover in the next 3 to 5 years.
And basically the same question to you, Steve, to start. Are you still a buyer here after the vaccine news? Does, as Helane mentioned, does airport testing change things? And does, like that CDC is saying today, try not to travel for Thanksgiving. Does that change the news in the short term?
Oh, appreciate that, Seth, and thanks for having me. So I think in terms, I agree with what Helane just said. I do think that regardless of the timing of a vaccine, we are going to get some blips, let's say, from the investor base as people start to go back, at least gradually go back to air travel. Last year we had 2 to 2.5 million passengers per day in the U.S. aviation system. We bottomed on April 14th at 87,534 passengers. We're now puddling along between 800,000 and 1 million today. So people are coming back. People have come back. I think as we look forward, it strikes me that on a 12-month basis, some of these names look attractive. And pricing-wise, I think exactly as Helane said, we are in this mode where the market is buying on news on the vaccine. So do we kind of have a sort of an early cycle setup where multiples expand as stock prices positively respond? But over the short term, at least, maybe we have to cut estimates. So that could lead to the exact early cycle multiple expansion we've seen in some other crises.
Yeah, very, very interesting. So let's stick. There's a couple of puts and takes there. Let's start with just talking about investors still. I want to talk about the investor base in terms of who owns and who buys and trades airline stocks. And I had an old boss who would refuse to touch airline stocks with a 10-foot pole. As far as he was concerned, they were uninvestable. And Warren Buffett shared that sentiment very famously, and then kind of somewhat famously as well, reversed that sentiment, bought airlines, owned a lot of airlines, multiple airlines, in fact. And then maybe he was right originally. He kind of got burnt. So Are we seeing a return to the maybe bad old days of the sector being a very volatile sector, one for maybe a little more cowboy risk-taking investors, or can value investors make money in this space, and can fundamental investors come back? And I'm going to throw this to you for the first one, Stephen, and then I'll give you a chance as well, Helane.
Yeah, certainly, Seth. So, it's interesting. I think it's on some levels hard to paint the space with the same brush. Mm-hmm. For example, let's look at the fourth quarter. I think the airlines have different levels of exposure with respect to international long haul, business travel, leisure, and VFR travel. So on one level, you have the likes of Spirit Airlines and Volaris poised to operate 75 some odd % of their pre-pandemic capacity in the fourth quarter. On the opposite end of the spectrum, you have Air Canada that has very heavy international long haul routes. They said they would operate just 25% of pre-pandemic capacity. So given the volatility in the space and people making fast trades, certainly I think there's a lot of short-term money in there now. And indeed, it feels like elements of the market have gone the Warren Buffett route by getting in and then getting out again. But I think that longer term, I think there are opportunities for the buy and hold investor.
And would you agree with that, Helane?
Yes and no. Typical analyst answer. What I'm finding, yeah, of course, right? Typical. So what I'm finding is that there are traders and they're buying the news, right? The vaccine goes. We just discussed. Vaccine, stocks go up. No vaccine or bad data, stocks go down. But what I'm finding is I'm talking to a lot more fixed income investors than I've talked to in a long time. And they're looking down the balance sheet and they're looking at yield, and they're trying to handicap, which airlines are going to be in business, who's going to win the recovery. And they're getting involved down the cap structure rather than just the equity. I think the equity is tough to value in the short term because there's all the dilution from the government money that most of the airlines took. And what we have been thinking about, and we do have some buys, we're pretty neutral on the group. We have an equal number of buys and holds, but what we've thought about is the valuation here. Since we don't know how long it's going to take, we've said 3 to 5 years for domestic, 5 to 7 for international to come back. Our view is that the stocks probably don't get back to pre-pandemic levels for a long time, because as people start to come back and there are things open, there's the whole discussion of what's open, what's closed, what can you do when you get to where you're going, and so on. As that starts to recover and the airlines can stimulate demand, they will. Mm-hmm. And so fares will take a longer time to recover. Right now, fares are actually higher than you would think they should be, given where we are in the cycle. But we think that the stocks do have room to move for sure.
And our audience agrees with that. We asked a poll, would you buy stocks today? Unsurprisingly, this audience tends to be bullish on airlines. Interesting to see. Helane, you had a lot of interesting points there. I liked what you said, by the way, about people who would traditionally buy bonds, now that the airlines have issued so much more debt and it's so hard to get a good interest rate, are interested in buying airline bonds. That's an interesting nuance I hadn't thought about. When we were prepping, and I was talking about fundamentals, moving away from some of the market fundamentals about how the stocks are valued and what multiple people put on them. Talking about fundamentals, what does it take to recover? You gave a timeline for recovery. I thought a lot of it was going to have to do with cost cuts. You said that's not necessarily the case. Tell me more about that.
Yeah, so in our view, the airlines have done everything they can to address the cost side of the equation. For 6 months, the government had a pass-through program where they gave the airlines money, grant money, to keep people employed because we didn't know how long this was going to last. Now, it's clear where we went from flattening the curve at some point to waiting for a cure or a vaccine. And as a result, what we're seeing is the airlines have done everything they can. They encouraged early retirements. They're trying not to furlough people. That's the sort of remedy of last resort. And that means that they need to look at the revenue side of the equation. And that's really what's missing. We need more revenue. And in order to generate higher revenue, we need things to do when we get to where we're going. I think Stephen cited the numbers. Out of 2.5 million people a year ago, 1 million people that would travel per day. Now we're getting 750 to 950,000. We touched 1 million last month, one day. We think that between November 20th and December 1st, November 30th, we'll see 1 million people per day travel, or 10 million people through the whole Thanksgiving week. And our thought here is that, domestic leisure is probably 85% of the way back. So we're down about 15% domestic leisure year over year, right? International, if you thought about that 2.5 million as 60%, 30% domestic, or rather 30% international, 30% business, and 40% domestic leisure, then that's about right. You would get to about 1 million, maybe 1.2 million, during busy holidays. But the 750,000 roughly business and similar amount international, you're not getting back. International is down 95%, and business is down probably 90%. So we're not getting back to 2 million anytime soon. And apparently we have to, like I said, I went home on March 6th thinking I'd be back in 2 or 3 weeks. And here I am on November 19th, and I'm still working from home. And seriously, I don't think there's an end in sight until I get to line up for that vaccine sometime in the second quarter of next year.
Okay. So domestic leisure come back faster, but let's not ignore that business and international badly hit. We all know that. Let's talk about what that means for some specific companies and one specific airline in particular. I want to talk with you both about American Airlines. And I know we have some staff, some American Airlines people in the chat, and I apologize, but it's no secret that American Airlines is not, Wall Street's not a big fan of American Airlines. It's been badly hurt as a stock price. The average analyst on Wall Street thinks that its stock price will be lower 12 months from now than it is today. And Steve, you have a sell on American Airlines. Helane, you have a buy, which is a bit contrarian. So let's set up a little mini debate here. I'm going to go to you, Steve, first. Talk to us about American Airlines. What are the struggles they're having, and why do you think that they're going to underperform their peers?
Yeah, certainly, Seth. So, it's an interesting case. I would say the carrier did, several good things over the past several years. $30 billion in investment over a 6-year period. A lot of that went into fleet. They have a younger fleet than Delta and United Airlines. I think maybe on some level, they had some bad luck on timing. Having a younger fleet these days is maybe mildly less pertinent with financing rates so low and crude oil below $45 a barrel. I think we've had a sell on American before most people had even heard of COVID, and I think that was basically predicated on the balance sheet and its operational metrics versus Delta and United, and we prefer Delta. So kind of the levels. We see balance sheet. I think it's gotten a bit tougher. I think, Helane said it well with the aid that these carriers got from Washington. On a fully diluted basis, the federal government will own over 10% of American Airlines. You compare that to Delta and Southwest, and U.S. government ownership is going to be 1% or less.
Yeah.
So when we think about even a gradual cadence of recovery, as we move forward with vaccine advances and what have you, I guess it's our concern that from a risk reward perspective, American Airlines rather, will be spending a lot of time trying to, manage the right side of the balance sheet, versus other carriers maybe spooling up more quickly.
And just for our audience who may not know, when you say the right side of the balance sheet, when you talk about that, you're talking about debt. Is that what you're referring to, right?
Yes, that's right.
So they have more debt than many, and even on the equity side, their existing shareholders have been squeezed out by government shareholders, and that concerns you.
Yes, I mean, I don't want to start poo-pooing on the federal government. Just kind of curious what that means on a board level, if they want to furlough people or they want to reduce service on some routes, and Washington says, "Oh, please don't do that." I mean, I don't know what the implications of that are going to be. I just think it's an extra question mark for the equity investor.
Got it. And Helane, so let's get the contrarian take here that American Airlines can actually outperform its peers despite having more government shareholders and more debt. What's the opposite? What's the other view? What's the other side of the
so our view is this: the company is not going bankrupt. They have enough liquidity, in our opinion, to survive the pandemic and get to the other side of this. We are assuming, actually, well, we'll back up a second and I'll say they have about 9 to 10 months of cash, assuming nothing changes between now and, let's say, summer 2021. Steve was right. They absolutely spent a lot of money on fleet in the last 5 years. I disagreed with the way they financed it, for sure. I had a number of debates with their management team over buying back stock versus financing aircraft. I thought they should have used some of the capital that they bought back stock with to finance the aircraft. But that's not the relevant point, in my opinion. We were getting to the level of 2020, 2021 pre-pandemic where American was going to have the youngest fleet, most fuel efficient. They were going to reach CORSIA 2050 standards by 2030, 35. Aircraft are 20-year decisions. So we're looking at them not having to buy new aircraft before 2025, 2027 at the earliest, and that would have been the 767 replacement. American, because they had so many older aircraft, and as an aside, I'll just mention over the last 5 years, the industry in general didn't retire aircraft when it should have, but demand was so strong and growth was so great and oil prices were so low, aircraft that would have been retired weren't. And so when you're looking at 2020 to 2025, you have a number of aircraft, in American's case, 156 planes that are being permanently retired, will never come back into the fleet, and they've got a young fleet. They don't have to do CapEx from here forward. Yes, they do have a stressed balance sheet, but I would argue so do Delta and United, maybe not as stressed. Interest expense for American will be over $1 billion a year for the next 5 years. So that's a big hurdle, but we think they can do it. Sequentially, second quarter to third quarter revenue was almost double, up 97% at American versus up 80% at Delta and up just under 70% at United. So sequentially, American's doing well. I'd argue better than the other two. One of the reasons is that Delta is not selling a third of their seats and won't until March of next year.
Can they do better than a low-cost or semi-low-cost carrier like a Southwest, though? Compared to Delta and United, fine. But what about compared to Southwest?
Yeah, I don't really know the answer. We have a buy on both Southwest and American, so clearly we like both. I mean, I think Southwest will win the recovery. The one thing I was going to say about American is their workforce as well. One of the big issues for the industry in general is that at the top 4 airlines, we were going to see retirements totaling 33,000 in this decade between 2020 and 2030. And that would have meant quite a lot of hiring and a lot of what I would call a juniority issue, going from the percentage of pilots under 10 years of experience at the company would be greater than the percentage of pilots over 10 years. And what American did right at the start of the pandemic is work with their pilots to accelerate retirement programs. So pilots, as you know, have to retire at the age of 65, and most retire somewhere between 62 and 63. So the message was, look, if you're thinking about retiring between now and 2022 or 2023, think about retiring now. And then that would enable American to keep the youngest pilots on staff, because with pilots, I was just going to say one other, it's last in, first out. So it would completely skew the pay scale. And that's another reason why we like American, is just because they're going to see more pilots retire this decade than the peer group.
So they've almost structurally taken better advantage of the crisis because they're going to have structurally lower cost and labor structure, which is a big issue for those guys.
I think so. I mean, I think other airlines have done a really good job of taking advantage of the pandemic. Copa, for example, Steve and I were on a conference call this morning with management. We talked about them. They're doing a great job. But go ahead. Yeah,
Yeah,
go right ahead.
we're running out of time, and I want to. You've actually segued perfectly for me, so I don't want to let that go because I want to talk about Copa and I want to talk about Latin America. Copa, like a Wall Street darling, but very little domestic travel. International is dead. So, like, can they come back? And I'm gonna throw this to you, Stephen, because I know you cover LATAM a lot. I know you both cover Copa, though. Maybe a bit about Copa and about those Latin American dynamics. Very curious how the picture internationally differs from the one we're seeing here.
Sure, absolutely, Seth. So I would say it's dramatically different in Copa's case. Unlike the United States, for example, whereas Helane said you have a this three-way breakdown with domestic, with leisure, visiting friends and relatives traffic, and business travel. United States, speaking more broadly, you have 2.5 domestic employments per capita. So the average citizen here, it takes 2.5 commercial flights a year. In Copa's case, you're talking about a very low density network. So, Panama is such a small country, it has 0 domestic flights there. And it's international short haul, Caribbean, Central America region, where you have a preponderance of low density routes, where Copa's market share is very high. And its market share is very high because it has the best connectivity. So for someone who wants to go from Guatemala City to Maracaibo, they can go straight through Tocumen in Panama for a faster connection versus flying up to Miami or Houston, transferring flights, going through Homeland Security, et cetera, then flying back down. So they can charge a premium for flying a shorter trip and burning less fuel than their competitors.
How are they getting those international passengers? I thought that there's no demand for that.
Yeah, so what you saw in 3Q, and Helane and I were on that call a little while ago, they had very little flow. The first 45 days of 3Q was shut down. You had a handful of, humanitarian flights. The airspace is only gradually reopening. But on a normal cycle basis, this is an airline that 76% of the destinations it serves move 40 passengers per day or less. So kind of a point-to-point carrier really has no chance to come into most of that stuff. And because it's got such a high share, probably on a post-pandemic basis with the LATAM's network carriers having some trouble these days, probably Tocumen Airport share goes even higher.
What about you, Helane? How are you thinking about some of the more international routes, Latin America, Copa, or even China, if there's anything interesting there?
Well, domestic China's back, right? Golden Week saw a 10.3% increase in domestic traffic because there's nowhere to go internationally. And domestic Russia's back. And I think that sends a huge message to the world that says once this pandemic is under control, there's pent-up demand and people will travel. To Steve's point with respect to Latin America and Copa specifically, the nice thing about Tocumen, there are a lot of great things about it. I love Panama just in general, but it's very well situated. You don't have hurricanes. You look at the hurricanes that swept through this week or this month in Honduras and Nicaragua. That's part of why the canal was built in Panama to begin with, as opposed to being built, through Nicaragua. Because if you remember your history, or if you've read David McCullough's book, The Path Between the Seas, you'll know that there were earthquakes, volcanoes, hurricanes in Nicaragua, and that's why it was moved south. So number one. Number two, the other thing about Tocumen as a connecting point in Panama is Panama uses the US dollar, so they can only spend what they earn. They can't print money the way other countries can, and they don't get into that hyperinflation. Then the other thing for Panama is the number of multinational companies that have their Latin American headquarters there. It's a sea-level airport, so you don't run into high and hot, which you would in Bogota or Mexico City. So where you have to limit the takeoff weight in the summer months. You don't run into the weather, as we just discussed. With respect to Latin American headquarters, over 140 companies worldwide have their corporate headquarters for the Americas in Panama because it's so easy on Copa actually to get as far north as Toronto in a normal environment, as far north as Toronto, and as far south as Tierra del Fuego. So you can cover the entire Americas, and you can do a lot of it in a day.
And any other, this is open to both of you now. Any other LATAM or international picks? So Copa, we kind of like Copa.
We like
long term. They're hurt now, but like historical and current advantage. So there's hope, even for these low cost international guys. This business model is great. Anything else we should be thinking of business model wise that you think are particularly well advantaged, either short or long term?
Well, I'll start and then throw it over to Steve. I would just say the low cost model, I think, is going to outperform the network model in the next 5 years because we've, talked about this with respect to the business traveler taking a long time to come back. And I think business travel will come back. I'm not in the camp that it's gone forever. I think we'll be 75, 80% of the way back in 3 to 5 years. And for a variety of reasons, number one. And number two, I think when you look worldwide, I think Wizz Air in Europe, Ryanair come to mind as two really great airlines with good balance sheets and kind of meet all the all the criteria for a stock you'd want to own without it being too risky. We talked about Copa as being a really great quality airline with a strong management team. I don't know the Asian market that well, so I'm going to defer on that one. And then the US, we talked about some of our recommendations, and then I'll throw it over to Steve because I know we're running out of time.
Yeah, we're wrapping up, but we have time for you to give your same thoughts, your favorite airlines, Steve, and you have the closing word.
Well, thank you, Seth. So, I mean, I agree with Helane. I think that the kind of discount airline model is the one that's going to win. So I also agree with Helane. Business travel will come back. I think there'll be some structural impairment there, but to say that business travel is dead, that's too extreme. So when we look in the current environment with visiting friends and relatives, leisure travel is bouncing back. You have these airlines out there with these big seat mile cost advantages that barely cater to any business travel. So the likes of a Spirit Airlines or Mexico's Volaris kind of screen attractively in that category. In some of the Latin regions, you have kind of hybrid type models that have a lot of trunk route exposure or are going to pick up market share in the region like Copa or Azul and Gol in Brazil that are going to benefit from these network airlines pulling back. So, you just had a fairly big consolidation event in Brazil last year, but I think there's even more potential lift from that, from the reorganization of some of these network carriers, hopefully coming out of the Chapter 11 process, maybe with higher operating margins, but smaller footprints. So, we're constructive on some of those names south of the border as well.
All right. So LCC remains king, especially long term. Thank you both, Stephen and Helane. Thank you so much for joining us. I really enjoyed this conversation and hope to speak to you soon.
Thank you. Have a nice holiday.
Happy Thanksgiving.